Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And oh man, there's been a lot of news coming out about General Electric in recent days. They have seen better days, to say the least. And we got this article out of Seeking Alpha, and please bear with me, it's a little bit longer, but I want to go into detail here because this is important. As the article says, General Electric, was that a run on the bank? And as the article goes into, earlier this month, General Electric, GE, abandoned its use of commercial paper. And I quote, "Once the largest borrower in the market, GE Capital is abandoning its use of commercial paper, debt with a maturity of up to 270 days. The move could add to its cost of financing, which is already under upward pressure after downgrades to the company's credit rating. GE's financial services division is instead becoming more reliant on bank lending and had available net credit facilities of $40.8 billion at the end of September. I knew it was one of the biggest borrowers of commercial paper during the financial crisis. I also knew GE's cost of funding would rise, but did not attempt to estimate the impact. Having its commercial paper pulled might have been the first signs of a run on the bank. It would also raise questions as to why GE would have $16 billion in loans backing $70 billion in debt. This could be devastating for GE. The situation? In October, Moody's downgraded GE's senior unsecured debt 2 notches from A2 to Baa1. The company's bond yields and cost of funding have spiked since the downgrade and the loss of its commercial paper program. Peter Scherer of Academy Securities argued the market's fears about GE's bonds are overblown since about $26 billion of GE's debt load was maturing in the next 2 years, mostly in 2020. However, rising funding costs will likely have an immediate impact on GE Capital, the company's financing arm. At Q3 2018, GE Capital had assets of $129 billion, of which about $16 billion was related to loans and commercial mortgages. Another $37 billion was in cash and investment securities, likely related to its $36 billion of insurance contracts. And you could see kind of a spread here. And as it goes on to say, GE Capital had short-term borrowings, non-recourse loans, and long-term borrowing totaling $70 billion. I assumed $16 billion was used to fund the financing receivables and $54 billion for some other purpose. I find it hard to believe that the lion's share of that $54 billion debt load was not GE debt simply parked at the financing arm. GE Capital's funding costs could become untenable. GE Capital currently does not make money. In the third quarter of 2018, it had revenue of $2.5 billion, flat year over year. GE Capital Aviation Services generated $1.2 billion in revenue, and the insurance operations generated another $700 million. Segment profit was $0 during the quarter. For the first 9 months of 2018, segment profit was negative $0.4 billion. Those segment profits will likely fall further as GE Capital's cost of funding rises. Below are bond yields of selected GE Capital bonds, and you can see that there. And from the end of 2017 to the end of November 2018, bond yields rose from 237 basis points to as much as 426 basis points. A 426 basis point rise on GE Capital's $70 billion debt load would equate to an increase in pro forma interest expense of $2.8 billion. GE Capital's short-term debt of $11.2 billion will likely have to be replaced immediately at higher rates. A 426 basis point rate rise would increase interest expenses by about $478 million. GE would likely be untenable for GE to grow its $16 billion loan portfolio given the spike in its funding costs. It may also be difficult to sell the loans at a reasonable price given GE's dire straits. Will the rating agencies respond? If GE Capital's current funding costs exceed the yield on the loans, then that negative interest margin needs to be acknowledged. It could practically make GE Capital a black hole. This could potentially impact GE's credit rating. GE has bank facilities in place, but has only tapped about $2 billion on these facilities. These bank loans sound more like bridge loans, short-term financing to fund GE long enough to unwind its financing arm. They could potentially be prohibitively expensive. So anyway, John, there's a lot to go into here. There's a lot of facts given. There's more facts that I'm sure that you have. This is a major story because, of course, General Electric, once one of the biggest companies imaginable, is really struggling, and this could lead to not just the company falling, but I mean the people, everyone involved in the company, massive amounts of debt, domino effect. Really, can you go into what this all means? Kind of tell the viewers what this can all add up to.
Well, General Electric is a falling giant. They have not innovated at all. They are just losing big time, like on all their electronics that they built, on their all their appliances. They used to build turbines and stuff for all the energy, creation and so on. They are an old company that is just about to die because in 2000 they had a share price of 59.31 at the peak of the dotcom bubble, but in 2018, of course, they're down at 7.50 US dollars. So it's clear that GE is on its way down. It's kind of similar with Deutsche Bank. You got to remember after GE, their actual creation of anything of value, creating appliances, creating electrical equipment and so on. After they fell through on that, and after, of course, they started to monetize and financialize the world, GE, like many other companies, they started their own GE Financial, which is, of course, where the problem comes in. And that is, of course, the big shadow banking industry in the world. And the shadow banks, for people to understand that, shadow banks are other financial institutions that can issue credit other than the banks themselves. So there's a ton of them. We go out and you get a car loan. A lot of times there's different car companies that have their own financial lending set up, appliances, anything that you go and do around the world today. When you go and buy something, most people do it on credit, and that's where they get their money from usually, is these shadow banking institutions. So these banking institutions, they are created because everybody saw that there was no money to be made in the real economy anymore. And what ended up happening is they were like, well, screw it. I'm not going to be in that economy anymore. I'm out of it. I'm exiting out of something that's not working anymore because Wall Street and everybody else financialized it. So they started to lend out money, and we see that in Norway, for example. A great example is our big one of the biggest airfare companies called Norwegian. They started a massive and a big shadow bank called the Norwegian Bank, and they're making way more money on that than actual the flights through the other corporation. So, of course, the financials is where most people levitated to and created, like Walmart, Home Depot, everybody has, financialized, a finance institution that they use to issue money out there. But you got to remember, GE has lost over $500 billion in market cap, Josh, over since 2000. So that's massive in itself. That is like wiping out half of Apple.
Yeah. Yeah, absolutely. And that's a whole other issue, the tech bubble. But I mean, John, what does this tell us about what's coming on in the near future, and what individuals can learn from this massive debt bubble, this massive potential domino collapse?
Yeah, no, it's this debt bubble that's coming is it's created not only, as you said, by regular banks and everything. Now we have all these shadow corporations out there that are just creating debt out of their own, because the only way to make money in today's this economy is by getting in and lending out money to everyone, becoming a bank, everybody becoming a bank. That is the next step of trying to save the whole financial and banking system from falling apart, because we need constant new creation of money. And the problem was that the banks, were starting to fail on that. And that's where, you had to fill a black hole of lending in order to save the economy. So now, of course, with all this printing going on, people have less and less money to buy stuff. So now when you go to Home Depot, to Canadian Tire, wherever it is, Walmart, you then have a credit card from them instead that you use to go and buy your stuff, and they make 20 to 50% on that. It's ridiculous, Josh. But that's where we've headed to. Of course, it's the end of the real economy and the taking over of the financialization of the world economy, and that's of course General Electric has just seen that move away from real things over to the financialization. It's a perfect point to make about them.
Yeah, I mean, we have to remember that after 2008, we never saw a true recovery. It's been propped up, it's been pushed off, it's been manipulated, it's been made worse long term. John, can you explain what this entails for the average individual watching this, not just like these major institutions, but how this affects individuals?
Well, if you had, for example, GE shares, it would affect you very badly. And I bet a lot of people had GE shares. So yeah, that's a major loss to people, of course. And then just seeing these corporations that used to have big, impact with employment and everything around in the United States, they are just deflating and dissipating. Meanwhile, Trump is trying to save that part and trying to get the industrial production and everything back to the United States desperately in order to save the economy. But
by
the
market
thing
manipulation.
Yeah, the thing is that everything is getting destroyed here, and of course, General Electric is one of the old giants. One of the generals, as you can say, General Motors as well, is another massive corporation that, and both of these have received government bailout. So that's the problem.
And heavily involved in debt and loans.
Yeah, and that's what you see though, Josh. Is, as I said, throughout the interview, is you saw the financialization. So everybody is seeking to make money with money, and that is the problem in any system. And we've seen that throughout history, when people just could go and make money with money instead of actually creating something of value. Everybody levitates toward that, and then you create so much money that nobody is able to afford anything anymore, and then it collapses in on itself because nobody's producing anything anymore. It's ridiculous. You are seeing the death of the monetary system when you see hyper-financialization now. Now you're seeing, of course, algorithms coming out, the high-frequency trading most of the markets today, and that's another way to just more rapidly trying to siphon out the money and make money desperately, because there's no more money to be made the old way, so they're gonna try to do it faster so they could siphon out a little bit of money a little bit faster in order to create that profit for themselves, but with making money with money, not actually creating something of real value. All of Wall Street and the banks are such a fraud, Josh, because they have propped up this financialization of the monetary system, of the economy, and there's nothing left anymore. You see a whole bunch of zombie corporations like GE and others out there that are loaded with debt, mass amounts of debt that they've accumulated, not just through their shadow banking activities, through having a financial part of their corporation, but actually by just borrowing mass amounts of money in order to survive, and then of course manipulate their shares by buying back their own shares. It's just insane, Josh. This whole system with, of course, General Electric is a perfect example of that. How they really have written their own death sentence by getting into this financialization of the economy. It's really nothing else more than just the last stage of the monetary collapse, I would say, when you see this kind of activities.
Mm-hmm. Yeah, absolutely. I'm going to take my headphones out for a moment because I could hear everything I say come back at me a second later. So excuse me for that for a moment. But I wanted to say it's about time. It's about time that this happens, because I know it sounds destructive and crazy to say, but I mean, the longer we put this off, the worse it's going to be. So of course we need these things to come crashing down, because the longer they're put off, we've seen this going on for far too long. This derivatives market is insane, worldwide, multi-quadrillion dollar derivatives bubble. This is a complete nonsense, and it's just the symptoms of complete central planning, manipulation, and debt. And I mean, it perfectly serves the massive institutions, the banks, the governments, these cartels, for everyone to be in debt servitude to them, for everyone to be complacent, for everyone to just go along with the tide and lose all their money and end up subservient to this massive power. But there's so many things that people can do to save themselves. There's more solutions than there are problems in reality. We need to look towards decentralizing everything, being financially responsible, educated, ruling ourselves, being independent, self-sustainable, food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, as we say all too often. Of course, gold and silver as wealth insurance, protecting your purchasing power against these massive fiat monetary collapses, which every fiat currency has collapsed, folks, throughout all of history. So let's remember that. And then, of course, decentralized cryptos that have sound fundamental value. There are a few of them, and they need to be noted. John, as we close this off, what's your bottom line?
Don't buy GE shares. How about that?
Sure.
It's definitely what we're seeing here. Of course, as I said, I tried to make the point throughout the whole conversation here, Josh, is the financialization is the death sentence to the economy. It takes away any of the real economy by everybody's could just make money with money, and there's no need to go out and do anything like to grow anything with agriculture. There's no need to produce any things of value. Of course, you got to create some stuff in order to keep the system propped up, like the iPhones and computers that we have, so you can keep on doing this massive scheme that they got going on. But there's not any more, like very little activity to actually create anything real in the economy and innovation. And so we have fallen, like the U.S. and General Electric is kind of like the slow, almost like the peak of the fallen empire in the United States, and it just shows it really well by being an actual corporation that used to be a powerhouse, but now they're worth nothing because they got involved in financial activities.
Well, they were actually credited with saving the Great Depression with the washing machine and dryer.
Oh, exactly, Josh. Yeah.
Yeah,
exactly. The appliance division, right? Like they used to be massive, General Electric. And the innovation that they did, right, with that, it's great because that actually automated a lot of stuff for people, so they didn't have to go out and scrub your clothes and stuff. And now you can actually go in and do more economic activity. So yeah, it definitely did save people from the Great Depression. So
I mean, it was innovative automation. I will say, though, I think we could rest assured that the war was a bigger reason why the Great Depression ended, but nonetheless.
Oh yeah, of course, yeah. That's the number one, and that's why we should have another war, Josh, so we could end this misery of the economy, Josh. That's what they want.
Can't wait.
No, it's
absolutely.
Yeah, but again, we have to stop believing in this financial system that is being propped up by money printing. And I'm going to go back to the speech of Ben Bernanke. I don't know how many times I'm going to say it, but I like to repeat it so people finally get it. But in 2002, Ben Bernanke said that we're willing to buy whatever we can if we have to, and we will print money to stop deflation at whatever cost. So there you go. That's what they're doing. It's loaded up with debt worldwide, and the bomb is about to blow. Well, it might not even blow. It might just go up. They'll try to, of course, like the markets will try to deflate themselves by collapsing because there's so much debt around. But again, the Fed and others will just buy up those assets and print us into oblivion. I think we're going to see deflation and then a hyperinflation after that. There's nowhere else to go after looking at the brains behind all this, which is the central banks and their policies, Josh.
Absolutely. Well, you guys know what to do. Decentralize everything. Like I said, rule yourself. Stay out of debt. Thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, Be the change. Like what you see here at WAM, don't forget to check the links below. GoFundMe, Patreon, we can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency, Steem that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so we have an email, worldalternativemedia@gmail.com. Send us an email with subject line yes, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.